What's up, everybody? Big day today. We got two things to talk about. One, the Fed increased interest rates by 75 basis points. And two, we now have GDP data showing 2 quarters of consecutive negative growth. So first, let's talk about the 75-point basis hike. This is the federal funds rate, so a great way for the Fed to slow down inflation is to increase the federal funds rate. Now that affects pretty much any debt or any form of borrowing money, which in real estate will often directly affect mortgage rates. However, something very interesting happened. Mortgage rates actually dropped about 0.5% based on which loan type you're looking at. That almost seems counterintuitive, because if it becomes more expensive to borrow money, you think that would directly correlate into real estate as well. So the fact that it didn't is shocking. And there could be a couple factors that are, in play. Maybe mortgage rates had already taken into account that we were going to have an extreme rate hike. And so maybe they overcorrected. They went too high, and now that we only had a 75 basis point hike, they came down just a little bit. Now, do I think we're at the bottom and that mortgage rates are going to continue to go down? I don't think so. The Fed is talking about continuing to raise the federal funds rate at a slightly less aggressive pace than they have, and I still think that mortgage rates are going to continue to tick up at least for the rest of the year. Now, there's people that disagree, and there's people that say towards the end of the year we're actually going to see a short drop. So it'll be interesting to see what happens. But that's item number one. Item number two, and potentially a little bit more interesting, is GDP numbers. The U.S. Bureau of Economic Analysis, or BEA, releases these numbers that shows whether or not our economy is growing, staying the same, or shrinking. Typically, a recession has been defined as 2 consecutive quarters of shrinking GDP. In Q1 of this year, we had negative 1.6 growth, and the number that everyone was waiting for today was the numbers for Q2, and they came in at negative 0.9%. which by most people's definition officially puts us in a recession. But something that's very important to note is that the government and the White House and most other entities won't actually recognize a recession until the National Bureau of Economic Research coins it a recession. So they are the ones that get the official say on whether or not we are in a recession. And in true political climate lately, there has been a lot of data that is coming out supporting the fact that we are not in a recession. Now, the NBER is a nonpartisan third-party organization, so they're not affiliated with either side. But I think the White House is so afraid of using the word recession that they are citing anything and everything they can to support the fact that we aren't in one. For example, creating 372,000 jobs in the month of June.
Hey, it's Tara with Regal Capital. Can you hear me okay?
Hi, Kara. I can hear you.
Great. Well, I will be quick.
Love it, but I'm actually not interested. But thank you very much for the call. Have a great day. Where was I? Okay, created 372,000 jobs in June. So they're saying the unemployment rate has held steady at 3.6%. But as you'll see in a video that's I'll probably release tomorrow, that might not be the case for much longer. We just came through earnings season, so a lot of companies are releasing, how well they did over the, last few months, over the last quarter. And one thing I said was if we start seeing companies that are usually a consumer staple within a recession, if their earnings aren't up to par, then that could be a pretty detrimental sign that we're heading into a bigger recession, which will then lead to more layoffs and therefore not give a lot of weight to the statistic anymore. So make sure to watch for that video. I think it'll be called hiring freezes or something along those lines. But you can't just cite unemployment as the only reason that we're not in a recession. There are plenty of other indicators that are showing that the rest of the economy is starting to slow down, and inflation has hit 9.1%, a 40-year high. And so people are just trying to save more money, therefore spending less, therefore a shrinking economy, therefore recession. So it'll be interesting to see if NBER makes the official call on whether we're in a recession or not. But all signs point to yes, so it'll be interesting to see what happens. So thank you guys for watching, and I hope to see you next time.